Good morning, good afternoon, good evening, wherever you are. I'm your host, FD465.tv, and in this video, we want to look at what has happened in 2025 selective out season and what it's really telling us on what could potentially happen in 2026. That is what we want to cover in this video. But before we proceed, guys, I am not a financial advisor. This video is not meant to be financial advice. Please do your own research. This content is also not targeting UK audiences, so please do not watch this video if you are from the UK. If you do watch, you are doing that at your own risk. Coming back to the content in this video, 2025, the year when BTC made new highs whilst most altcoins failed, is consistent with a market that is increasingly barbell. Talking about beta concentrates in BTC, macro liquidity proxy, institutional rails, and so forth. For BTC, alpha concentrate in a smaller set of alts that can justify flows with at least one of credible institutional adoption, durable token value capture, and clear product market fit, strong distribution, and regulatory survivability. And as you'll see, some of these things will become apparent when you see that some of the projects we're going to feature in this video have not even launched their mainnet yet, and yet they are doing quite well. That quality filter is unlikely to disappear in 26. If anything, it tightens if macro remains choppy. A late 2025 pattern of sharp drawdowns after a BTC all-time high also reinforces that liquidity regime shifts can arrive abruptly. Let's look at narrative A. So we're going to look at this using the narrative window. So narrative A that I think is going to do well in 2026. Got privacy. I got the likes of ZCash, Canton, ZK Sync, Midnight Network, and Starknet. I think projects within that category, including the ones we just shared with you here, I think they are going to do well. Let's look at the investment logic for the privacy narrative there. Privacy demands rises with on-chain adoption. You're talking about payments, identity, and real-world assets or RWAs. But the winning implementations are more likely to be privacy without controls. We're talking of selective disclosures, compliance hooks, rather than pure cypherpunk anonymity. And what improves in 2026, or what are the 2026 tailwinds? Well, we're talking of regulated privacy and selective disclosures, which I think are going to become a selling point for institutions and tokenized finance. We're talking of privacy for positions, counterparties, and settlement flows. ZK stacks will mature as well, proof systems, provers, user experience, and get pulled into mainstream apps as infrastructure. So they are not only going to be infrastructure themselves, they are also going to be integrated into infrastructure, different infrastructure, whether it's private blockchains or public blockchains, that's yet to be seen. What can still suppress the trade or the headwinds? Well, listing risk, compliance pressures remain structurally higher for privacy coin branding than for privacy tech embedded in L2s and L1 stacks. Token value capture is often weaker unless fees or MEV utility are explicit. And likely through-line winners inside privacy are going to be those that are offering regulated institutional privacy, arguably overlapping with RWAs. So the likes of Canton would actually be a big winner. Canton explicitly positions as a privacy-enabled open network for regulated institutions. Recent market attention around the CC coin has been explicitly tied to institutional tokenization narratives rather than retail mimetics. And 2026 watch items include real production integrations, sustained on-chain activity, and whether Canton becomes the default privacy fabric or RWA venues. Privacy coin with upgrade cadency, talking of ZCash and the ZEC coin. ZCash continues to ship upgrades and remains a bellwether for pure privacy asset demand. 2026 watch items include sustained shielded usage and exchange accessibility. Next, you got privacy as ZK infrastructure. So ZK Sync and Starknet for this category, for this group. ZK Sync is an active push to evolve the ZK token from governance toward economic utility, including revenue, usage, linkage proposals. Starknet continues to make itself as a long-run ZK infrastructure with a published roadmap emphasizing scaling and decentralization. And as for 2026 watch items for ZK infrastructure, well, you're talking of fees and revenue design, token value capture, developer traction, and supply unlock dynamics. Starknet is a notable unlock headlines into early 2026 per some trackers, so treat it as a volatility factor. Next, you got the new entrants, Catalyst in Midnight. Midnight Network, the Night token for Cardano or from Cardano. Midnight Network's Night token launch and distribution mechanics mechanics are a fresh catalyst going into 2026. You're talking of new network, new attention cycle. And like I highlighted earlier, Midnight Network hasn't even launched its mainnet, so there are no products to talk about. But watch items for 2026 as far as Midnight is concerned. You're talking of mainnet traction beyond launch, developer ecosystem, and whether programmable privacy translates into sticky apps. Privacy bottom line for 2026, well, privacy is investable, but it is unlikely to be a broad rising tide. Expect it to remain selective with the strongest setup in institutional friendly privacy. You're talking of the likes of Canton and the ZK infrastructure with credible token utility upgrades, ZK and Starknet, plus event-driven upside with the likes of Night, because I think Midnight Network also uses zero-knowledge proofs for its privacy option. Then if we move on to this next narrative where we are looking at real-world assets, the likes of Ondo, Link, and Quant. The 2026 investment logic here is that real-world assets are going to be the clearest bridge between crypto and traditional finance because they import yield, collateral quality, and institutional workflows. This narrative already has had data behind it. Why real-world assets are the best structural odds in 2026? Well, tokenized treasuries and money market products have shown strong growth and a clear cash management as well as collateral use case. Data points cited of real-world asset focused trackers show tokenized treasury value rising materially year on year in 2025, reinforcing that this is not merely a narrative trade but actual real-world use cases. And the likely through-line winners inside RWAs include Ondo as a product layer. Ondo publicly highlighted surpassing 1 billion TVL in 2025, material traction for on-chain treasuries as a product category. And watch items for 2026 include its expansion from treasuries into broader tokenized markets, distribution partnerships, and sustained TVL and volume quality, not just incentive TVL. And you cannot talk of RWAs without talking about the plumbing and standards layer, which is Chainlink and the Link coin. Chainlink's core claim here is that oracles plus cross-chain messaging such as CCIP become essential middleware for tokenized finance flows across chains and venues. Even if you discount the more promotional estimates, the direction is consistent as real-world asset scale, reliable data, and interoperability become mandatory. Current Link price snapshot here is sitting at about $12.47. So that's on the plumbing for RWAs. We also have the enterprise interoperability layer narrative with Quant. Quant continues to position around interoperability middleware, talking of the overledger, which is aimed at enterprises and multi-ledger environments, conceptually aligned with tokenization's many venues, many ledgers reality. And watch items for 2026 as far as enterprise interoperability layer is concerned. We are looking at a verifiable enterprise adoption, recurring revenue model clarity, and whether token demand is structurally tied to usage. So the bottom line for RWAs going into 2026 is as follows. If you force a ranking of probable macro winners, RWAs are the most likely to come out on top because they have the clearest institutional pool, measurable adoption, and non-speculative utility. Why are we talking about enterprise and institutional pool here? Because we know retail, whether they are here or not, they have not turned up in 2025. That may likely remain the case in 2026, so we may actually need adoption from institutions for this market to move forward. Next, let's move on to the next narrative, which I think is also going to be one narrative to look forward to in 2026, and we're talking of AI with NEAR, Internet Computer or ICP, Virtuous Protocol, and Render Network. They are just examples. There are many more within this category. And the investment logic for 2026 is that AI remains culturally dominant, but the crypto AI subset is prone to crowded trades and unclear token value capture. The winners are likely to be the ones providing scarce resources, the token of compute, or enabling new on-chain economic primitives such as AI agents. And likely through-line winners inside AI will probably be focusing on tokenized compute and GPU marketplace. So Render Network and the likes of Akashi Network will probably benefit within this category. Render's positioning is straightforward though. Decentralized GPU supply saving rendering and adjacent workloads. The project maintains a roadmap emphasizing next generation rendering and AI tech direction. And the Render token itself is sitting at approximately $1.30 at the time of recording. Then we also have on-chain AI and sovereign compute thesis where Internet Computer comes in. ICP's core bet is running more of the stack on-chain, including AI adjacent capability, and it continues to market a roadmap oriented around decentralized sovereign AI concepts. And currently at the time of recording, the ICP coin is sitting at approximately $3.04. Next, you got AI agent economy or Launchpad with Virtuous Protocol. Virtuous Protocol frames itself as infrastructure for autonomous AI agents that can transact on-chain and form agent tokens. The watch items for Virtuous into 2026 include real agent revenue, retention, and whether agent tokens avoid infinite dilution of attention, because we saw that towards the end of last year, 2024 into 2025, there was a lot of dilution. And there is also AI and chain abstraction with Near. Near is explicitly pushing user-owned AI plus chain abstraction as a strategic direction. So 2026 watch items for AI include developer adoption and whether intents and abstraction translate into consumer apps, not just ecosystem messaging. That's for Near. AI bottom line for 2026 is as follows. AI can absolutely outperform in best, but as a category, it is more sensitive to sentiment cycles and overcrowding. The most defensible subset is compute. Good example is render and agent rails with measurable cash flows. You're talking of virtuals if it proves revenue durability. So, which narrative is most likely to come out on top from AI, RWAs, and privacy? Well, I think RWAs are going to be the strongest structural tailwinds. Measurable adoption, collateral, yield use cases, and institutional pool are all going to prove too much for the other categories. As for AI, it can outperform tactically, but dispersion will be high. Compute and AI agents are the most credible sub-themes. So any project within the AI category that is offering the infrastructure for AI agents or actually has a viable marketplace for AI agents, I think that will do well. As for privacy, it is still powerful, but the winner is most likely going to be privacy embedded in institutional and RWA rails, the likes of Canton, ZK infrastructure with token utility, the likes of ZK Sync and Starknet, rather than a broad privacy coin rally. But we know what happens when a narrative takes off within this space, it lifts all boats. So what I would like to know from you guys is, of the three categories we have highlighted in this video, which tokens or coins do you think are going to come through from the three categories we've shared with you? Privacy, AI, and RWAs. Share with us the actual tokens. We may actually do a different portfolio for the top narratives for 2026 and do it like that. But the way we are going to be managing our portfolios, we're going to be managing them actively. Until the next one, guys, FD for 65.tv. Signing out for now. Bye.